Most beginners think going full-time in real estate means quitting their job, and in reality, it means building systems so your job becomes irrelevant. In this video, I'm breaking down the 7 exact steps that real full-time investors need to follow to replace their income, scale safely, and avoid the costly mistakes that keep most people stuck part-time forever. And at the end, I'll show you the one shift that determines whether real estate becomes freedom or just another stressful job. Think about it. If nothing changes, will your life look different at all 5 years from now? 2026 can be the best year yet, and real estate can be the vehicle to get you where you want to go. So let's dive in. So step 1 in this process is pretty simple, is you have to make the decision. It all starts with a decision. It doesn't start with a deal. It doesn't start with a tactic. It doesn't start at all until you make that decision in your head that you are going to do this full time. You've got to tell yourself, this isn't a hobby. This isn't something where I'm going to just make a little bit of extra money on the side kind of thing. This isn't something that I'm going to do when I have a little bit of time, that sort of thing either. That decision is going to show up when you block time on your calendar, for example. You've got to set aside time, because if you don't, you're never going to have the time. Life gets busy, let's face it. If you have a job right now, especially, you go to your job, you work, you come home, you're probably pretty tired like most people. And if you don't block time on your calendar, it's never going to happen. You also have to track your numbers. So understand, in a lot of these videos I put on YouTube, I talk about like tracking KPIs, key performance indicators, but you should be tracking your numbers on a weekly basis. That's so important, and it's going to help you grow your business, because if you don't track your numbers, you don't know what's going on, and you actually hold yourself accountable. If you're tracking numbers, you can see when you slack off and aren't doing the things you want to do that need to move the needle to get you success in real estate investing. So be sure to track your numbers on a weekly basis. Investing in your education is also important. You got to spend some money typically to get educated, to know what you're doing, and you really need to block off distractions. So often when you're first thinking about getting started, or you're kind of dabbling like 1 foot in, 1 foot out sort of thing, there's all these distractions that are bombarding you with life, with work, with all the things, and you really have to try to drown those distractions out so you can focus on doing what you need to do. Because let's face it, in the beginning, you have a very limited amount of time compared to once you're full time. You're really limited on your time, so that time has to be really, really focused. Let's try a practical example real fast, okay? If I was to look at your calendar for the last 30 days, would it look like, would I be able to see that real estate actually really mattered to you? And if the answer is no, then that means you've got to get more intentional about your focus to accomplishing this. All right, step number 2 is you need to pick one income engine. That's right. Don't try to chase too many different things at one time. What's the old proverb, like if the man that chases 2 rabbits catch none sort of thing? You've got to pick one thing and focus on that one thing. Most people fail because they just chase all of the shiny objects. And in real estate investing, there are a ton of shiny objects out there, let me tell you. People chasing wholesale checks, people trying to flip properties, people trying to do rental properties, people trying to do short-term rentals, long-term rentals, mid-term rentals, people trying to house hack, people doing all these different things, and they're limited already on their time as it is, and it just ends up becoming overwhelming, and they just never get started, or they give up because they just can't get traction. So it's really important when you first get started to choose one income engine. Now don't fret, because you're going to be able to add things to that over time. The more comfortable you get as you start to grow in your real estate investment journey, you're going to be able to add more tactics and strategies and things that you can do. But in the beginning, it's just really important to be focused. So some examples that I'm talking about, like if you want to wholesale properties to try to get cash fast, everybody is starting in a different place. You may really need cash to get out of your current full-time job. You may have a high income job that you don't want to leave, that you want to be able to invest in real estate. And again, you can invest in real estate as a full-time investor but still have a job. You just gotta be able to allot the time to do that and build the systems and processes like I talked about at the beginning. But people start at different places. So maybe you're wholesaling real estate to make fast cash. Maybe you're flipping properties to build higher income whenever you're generating that revenue from your flips. Maybe you're using the BRRRR method that I talk about a lot on this channel to end up building long-term wealth and recycling that capital. Or maybe you're just buying straight rentals just to build that stability over time. But here's the key to remember, and this is something that's very, very true with most things in life. It's not necessarily the strategy that you pick, it's the consistency of executing on that strategy that you choose. You need one strategy that you execute on consistently. Choose one strategy, execute on that strategy for at least 6 to 12 months, and constantly track your numbers on a weekly basis. Ignore everything else. All of the noise, just ignore all of that and focus. Focus is going to help you build momentum, which is something that's very critical, especially in the beginning. At the end of the day, the momentum is what's going to create the income that you're looking for. All right, step number 3 is you've got to learn how to buy properties at a discount. I think this is one of the most important cornerstones of being a successful real estate investor. This is a step that separates the gamblers from the real investors. Now, I talk about this in my free course. It's a 2.5-hour free course. You can check out the course for free. That link is in the description below. But it's critical that you master the acquisition process. You've got to buy these properties at a deep discount. I was just talking to one of my students, and he's actually in the process of making an offer on a home, and they're negotiating back and forth. And he has a number that they've kind of landed on, and it looks like on paper that this is going to be okay. But once I showed him the numbers, it just shows that it's actually going to be a really, really, really tight deal. So you've got to make sure you buy these things at the right price point. The acquisition process is really where you're going to make your money. And really, when you think about it, in order to buy at the right price, there's a lot of things that you really have to know. So first and foremost is you've got to be able to have a good, solid understanding of how to generate what a property's ARV is. And ARV stands for after repair value. That is like number one. You got to be able to calculate the ARV. The number 2 thing that a lot of people get mixed up or they have trouble with is estimating repairs. So you got to know the ARV, and you've got to know how much repairs are going to cost when you're making an offer. Now, the one way that you really truly know what repairs are going to cost is you get contractors in there and you get bids. But when you're having that conversation, there's some easy things that you can do. I talk about it again in the free course. There's some easy things that you can do to calculate the cost of repairs. But you've got to know ARV and you've got to know repairs. You've got to also be able to calculate cash flow. And cash flow is tricky because, again, when you're just getting started out, it's like, okay, my mortgage is $1,500 and I'm getting $1,800 in rent. So, okay, cool, I'm making a few $100 in cash flow. No, you're not, because you got to think about, you've got all these other factors that people typically don't factor in when they're getting started. Like, we talk about for rentals, repairs, ongoing repairs, CapEx. You've got property management. You've got all of these things, property taxes. I just paid a ridiculous amount in property taxes here yesterday, running around all over different counties where I am for my properties that I invest in as rentals. So you've got to make sure you factor in all of those things and actually understand pure cash flow, what it really is going to be when everything's paid off. And then lastly, you really want to make sure that you have multiple exit strategies. You need to understand, how am I going to eventually exit this property? What is the end game that I'm trying to accomplish with this property? And again, it's always really important, and I always stress to my students, like, have multiple exit strategies, not just one thing, because what if that one thing doesn't work? A really simple framework that you can use in order to kind of work through this in your head is, how do I make money if I sell the property? How do I make money if I hold the property? And what goes wrong if I'm wrong? If you're not able to explain a deal on one single sheet of paper, you probably don't really understand the deal. Full-time investors are buying on margin, not just on hope. Hey, real quick, if you want a clear step-by-step breakdown of how investors buy, renovate, rent, refinance, and repeat safely, I've put together my free BRRRR Mastery Guide. Now, this guide is packed with awesome information. It walks you through the numbers, the process, and it talks about the mistakes that you want to make sure you avoid. So it's linked for free in the description below. You can check that out. Now, let's keep on going. All right, step number 4 is really critical as well, and that is being sure that you're able to create consistent deal flow. Because if you don't have consistent deal flow, what typically is going to happen is you're going to try to fit a square peg in a round hole. You're going to try to force things to work when it's not really a deal, because you don't have the flow, you don't have the opportunities. And so having that consistent deal flow is absolutely essential. You can't go full time with just random deals. If you have someone in your neighborhood that's interested in selling, and you're like, okay, cool, I could potentially get a deal out of this. Like, that's great. The one-off deals are great, but you're not able to go full time with that sort of thing. You need consistent deal flow. You need direct to seller marketing. You need to have a daily follow-up schedule. You need to make sure that you're networking with intention, and you need to make sure that you're tracking all of your leads on a weekly basis. Here's the hard truth that I think a lot of people don't understand when they get started is if you're not marketing, your business is not breathing. Think about a car. It needs fuel in order to move forward. And if you're not putting fuel in the vehicle, it's just not going anywhere. So something that you can do to be very tactical about this is have 3 to 5 lead sources. I talk about this in my free course that I have. I talk about it on this channel a lot, but you want to have multiple lead sources. You don't want to just rely too heavily on one single lead source, because if something goes awry with that, then you don't have any leads coming in. You need to make sure that you have a very systematic follow-up process. This is something to this day that I still am always trying to optimize is how do we follow up with these leads? Because there's a statistic out there that like 70% of deals are in the follow-up when it comes to real estate. And so you're going to have to follow up. You're not typically just going to close a deal on the first call. I mean, it does happen, and it's awesome when it does. But typically you're going to have follow-ups, or you're going to miss a ton of opportunities. So you need to have a follow-up system. You really do need a CRM. You don't have to geek out too much on this in the beginning if you don't have a lot of money. You can literally, if you have to, start out using spreadsheets if need be. But really, there's a lot of great CRMs out there that you can check out that will really help you with follow-up, and even you can build out systematized strategic follow-ups on set days. It'll send out an email or send out a text, that sort of thing. And you also really want to be able to have a weekly pipeline review. So you want to make sure that on any given week that you can look and see kind of the average amount of leads that you have coming in. Again, this goes back to the KPI tracking, because if you do that and you're consistently looking at your lead pipeline on a weekly basis, you can see when there's dips or there's ebbs and flows in your pipeline, and that's going to help you to identify whether or not you need to like redirect marketing dollars somewhere else. If you have one thing that's starting to dry up and it's not performing, and again, we're talking about looking at the leads and looking at acquisitions and deals, not necessarily sometimes. You know, my TV leads that I have that come in, we get less TV leads than we do in some of the other lead sources, but we have a really high close rate on those TV leads. And so it's not necessarily about the number of leads, but look at the quality, what sort of closing percentage are you having on those leads, that sort of thing. Deal flow is just something that's not optional. It's absolute survival. So step number 5 is you need to solve funding permanently. Most people have this mindset, and again, it's mindset. They think I'll go full time when I have enough money to buy deals and do that sort of thing. I'll do that whenever I have enough money to buy real estate, and that is the wrong approach. Full-time real estate investors build relationships, not savings accounts. You should be having lots of conversations with private money people. You should have conversations with people about JVing together to do deals, that sort of thing. You should continue to learn a lot about creative financing options. I have a ton of information on this channel that teaches you all about how to do creative financing. You should be networking with hard money lenders. Like, you're constantly having these conversations so that money is not a problem for you to buy real estate. At absolute minimum, you should be talking to at least one potential money partner every single week, and that's at minimum. Because again, even if you don't have deals right now, you need to be having conversations with people, and you need to be having conversations with potential hard money lenders and local banks and that sort of thing, and you need to be learning creative financing options so that funding is not an issue for you. Look, I get it. So many people, when they first get started, that is the number one hurdle in their head is, how am I going to invest in real estate? I don't have the money to buy the real estate. I can't go out and buy a $200,000 property. I don't have the money. Or how am I going to do this? I've got a little bit of money saved up for a down payment, but I don't have enough money to renovate the property. How am I going to do this? Trust me, use these strategies I'm talking about and be able to set up a pipeline before you even have a deal. If you don't have a deal yet, I mean, hopefully you have a deal at this point as you're watching this video, but if you don't, be setting that up now. Don't wait until you have a deal. One of the key factors that's important with that, though, is you need to be able to explain a deal clearly. You never should use money from others, lenders, banks, whatever, if you can't explain the deal clearly and understand what's going on. So that's, again, goes back into having the education that you need to constantly be growing. I've been doing this and have success with this, but I'm constantly trying to sharpen my axe and learn more skills and learn, and always like being a student of the game. So you've got to be able to be able to clearly explain the deal that you have so that you're confident and you can also project that confidence, but obviously you want to know what you're doing as well. And finally, you need to understand leverage and risk. So here's the deal when it comes to real estate. So many people out there who don't invest in real estate, they have this sort of negative thought about real estate because of the risk. Basically, people think real estate is risky, typically because of leverage. They think about like you can leverage and then you lose everything, the market goes south and that sort of thing. Leverage can be very risky. So you don't want to over leverage at all. Like I definitely don't recommend you over leverage. But when you use the strategies that we talk about, you're using leverage to your advantage. So you're using leverage to buy the real estate. And then if it, for example, when we talk about the BRRRR strategy, you're going to be able to use that short-term leverage to refinance and pay off the short-term lender, your private money lender or hard money lender, whatever, and refinance into a fixed 30-year loan where the mortgage payment is substantially low enough to where the rent that's coming in pays for it. And then we also talk about how that you're going to have vacancy, you're going to have repairs, you're going to have capex, you're going to have all these things. So you're factoring that in. So when those things do happen, you've got money set aside from the rent coming in to cover those things and to make sure you're still paying your mortgage. So don't let risk like cloud your head like, oh, this is just so risky, the leverage thing. Leverage can be risky, but it's when it's used properly, it can be a huge advantage to you when you're building your portfolio. All right, step number 6, and this is a biggie. Systematize everything you do early. So many new real estate investors that are getting started with this, they don't put a lot of stock in doing this, and they start doing things all from their head, and they're just sort of willy-nilly all over the place. And what's dangerous about that is it actually works. You can do that in the beginning and get away with it. And you can actually do it for quite some time and get away with it. That's kind of what I did. I was just flying wide open and buying properties and doing deals, and it was great. But eventually what happens is you get to a place to where you've got too many balls in the air and it's too hard to keep up with things, and you're dropping leads and you're having all these opportunities that you're missing, and you just feel completely overwhelmed. So early in the game, like from right out the gate, one of the things that you should always be doing is developing and optimizing your systems and your processes. Think about it this way. If you're the system, you're going to be the bottleneck. Your goal is to actually replace yourself before you go full-time. Think about it. Like you're not trying to get from one full-time job into another full-time job that's even more stressful where you don't get the weekends off, let's say. You're always on the clock. Like you don't want to do that, right? So that means that you need to develop checklists. That means that you need to develop SOPs, standardized operating procedures. That means that you've got to constantly be updating and optimizing those things, because here's the truth. As you go through this, things are going to come up that you haven't experienced before. And you're like, okay, here's a new thing. How can I make it to where the next time this happens, I have a standard operating procedure for this, a system and process for this to make sure that this is easily, like I could literally hand this off to somebody that works for me and they know what to do. The key thing is it needs to be repeatable. And that gets difficult because yes, we do have things that generally come up that are sort of random, but over time, the longer you do this, the more the things you see these patterns of things that repeatedly come up that you're constantly dealing with. And if you have good systems and processes in place, it will make your life so much easier. So some of the things that you would want to start out with, for example, are like lead intake. You need to have a clear process of what happens when you get a lead, from the start of that lead to calling the lead to follow-ups to everything from A to Z when it comes to that lead. You need to have an acquisitions process. What happens when you get a property under contract? Then what? What happens after that? If you don't have a clear system and process and you're just kind of like winging it every time, it's going to get very chaotic. You need to have a renovation, like a template scope of work, so that you can easily identify what you need to do when you buy a property and renovate it. You need to understand for rentals. You need to have a property management SOP, particularly if you're managing your own rentals. You need to make sure that you have all of that stuff well laid out so that it gets easier and easier over time, because you don't want to be stuck in the bottleneck in your business. And finally, a big one that you really need to do early on that so many people just do not do is bookkeeping. You need to make sure that you keep your books clean from the start. This is something that I will bare my soul and say that I did not do a good job of early on, because again, I'm trying to manage everything. I'm trying to wear all the hats, and I'm like, yeah, I can handle the bookkeeping, it's cool. And then I didn't. And then I'm hiring people and trying different people out. And it just, you need to make sure that early on in your business, before you think you need it, that you really make sure you have good books, because that's going to also be a way that you can track your KPIs to make sure you see where money's going, where money's coming in, that sort of thing. The real freedom from investing in real estate and having all of this in place is really removing yourself from the chaos. When you can remove yourself from having decision fatigue all of the time, it's a great feeling. All right, step number 7. Let's talk about this one. Replacing your income before you quit your job. Now, let me just take a quick side note here, because I do think this is important. Some of you watching may love what you do. All right, I deal with a lot of people and help a lot of people in real estate that are like first responders, teachers, coaches, firefighters, police officers, this sort of thing. And if you love what you do, man, keep doing what you do, because that's an awesome thing when you just love what you do. It's like the saying, you don't work a day in your life when you do what you love. But for a lot of you watching, you are wanting to exit your job and be able to focus on real estate investing full time. So leaving your job before you're ready is where a lot of people end up getting hurt. You don't want to quit when you feel ready. You want to quit when the numbers actually work. So here are a few benchmarks that can prevent you from getting hurt. Number 1 is I would recommend making sure that you have consistent monthly income coming in. Keyword there, consistent. You don't want to have the ups and downs and the ebbs and flows. You want to be able to have some consistent money coming in, and you really want to have, if you're going to be conservative and cautious, you really want to try to build up 6 months of reserves. Now, I know for people watching this, that may seem crazy. They're like, man, what are you talking about? 6 months? How in the world can I do that? Trust me, when it comes to investing in real estate, if you're doing things like wholesaling or you're flipping properties, you can build up 6 months of your current income faster than you think. You want to make sure that you have proven deal flow. Like we talked about earlier in the video, you need to have some consistency in your deal flow, and that's going to be really, really critical, is to make sure you've got constant deals coming in, and you want to make sure you have repeatable execution too. So you want to be confident that you're able to take those deals that are coming in and repeatedly execute on your systems and processes that you've been developing, and have some consistency in doing deals. That's really, really important, because that's going to also give you more confidence, and then you're not so worried about is this going to work, is it not going to work, that sort of thing. You don't want full-time to be a leap of faith. You don't want to do that. You want it to be a calculated transition. That's the way you need to look at this. And if you factor in these things that I've discussed, you're going to be able to do that. Becoming a full-time investor isn't dramatic. It's one decision, one strategy, one system at a time, executed on a consistent basis. The path is simple, but it's not casual. Now, here's the shift that I promised at the beginning of the video. Full-time investors stop asking the question, can I do this? And what they do is they ask, what must be done to build this? How can I make this just inevitable? When success becomes inevitable, excuses will disappear. And if you want help building this the right way, I also offer the course on real estate investing. It's a free in-depth course that walks you through everything you need to know to start, structure, and scale property. That link is in the description below. It's 2.5 hours. It's absolutely free, so go check that out. And as always, thanks for watching, and I look forward to seeing you on the next video.